So you guys might be asking yourself, Fire, are you crazy? You're buying deltas. And yes, I did buy 1,000 SLV today. And I need to explain myself, right? So, if you look at SLV, it has probably one of the best technical charts out there in terms of risk reward and everything. So here, this is the parabolic move. We went down past it and then sort of recuperated, right? That's the return to the mean thing, right? Here, parabolic move. We came down below where it started going parabolic, and then we sort of rallied, right? And now it's sort of forming like this big pennant flag thing there. And I went specifically delta. I went with deltas. I didn't do the options thing because of the risk reward, essentially. So here, my stop could be very, very like close. Like, I could put my stop here or whatever. Right now, I don't have any stops on it, but it could be like 15, 20. When you look at it on the risk profile, let's say like 15, right? That's like $1,000, right? 15's like here. So I can have my stop around like 15.20 or 15.10. Oh wait, it's actually less. So at 15.04, at 15, my risk is like $600, right? That's like nothing for me. And if this thing starts to move, like let's say we pop 17, I don't have to ever think about it again, okay? Because it's going to be moving on a third wave. I don't think about it. So the risk reward is really nice. So that's great. Technically, it's pretty nice, right? I think the end of this bubble period it's done, right? And so someone made a similar chart of like Bitcoin and silver, like this little period here. But now let's talk about more of the fundamental reason. So right now, in the US, we have inflation rates of 2.8, and in the euro, we had a little spike now to like 1.9. And so let's go back to 1932. So the crash, right? So we go correction, right? Kind of fixed it, then a little bit of side period, and then another rally. I think we're like in this rally right here. And that's where you get a little inflation. That was 10 years after, right? This big bull market, crash, and then sideways. I think we just had this, and now we're just going sideways for a bit. But you had an inflation spike. Pretty big. That's 15-20% inflation. And interest rates didn't move. They did not move the Fed funds in that time period, right? So people lost a ton of savings. Like everyone in the country lost 15% of their wealth, pretty much, in one fell swoop. So that's cool, right? But that's not like the greatest thing ever for me, right? What really turns me on to getting long is, so here you have the U.S. inflation. So here, inflation, silver rallied, and then the rate's gone up, but silver's kind of gone sideways. Okay. So what really nailed it for me is, boom, euro inflation rate. As you know, I am very bearish on Europe. I do not like the ECB. So it actually silver correlates really well with the ECB or euro inflation. So right here you have the 2010 bubble, right? And during this period, I would have to overlay like the dollar on this, but let's see, 2010. Yeah, but basically it's correlating with the ECB inflation rate. And so we had this little spike, and now a little sell-off, and then, another little spike. And if you can put it all together, right, I think the dollar's going to be strong because we're going to see inflation everywhere else. And it just so happens that PMs will correlate with that. So that's really what nailed it in for me. Once people are making, they're doing pretty well right now. So we might have a slight inflation spike, and if I get in now, I won't have to worry about trading the thing. So that's what I did.